This is the exact opposite of what we're taught about trading, and it couldn't be more true. Trading is subjective, and it has to be. So let's bring it all back to the beginning. As a new trader, we may enter the market, we may get lucky, we may have some wins, we may have some losses, we may hit it big, we might guess where a stock is gonna go, or where this is gonna go, or where that's gonna go, and we might be right. Probably think we can time the market, even though we've been told we can't time the market from almost every person who has an investing platform these days on social media or really anywhere. But we think we know better, and so we proceed. We proceed to eventually get our asses handed to us. Now, some may make it farther than others, but at the end of the day, the end result is the same for almost anyone. We get wiped out, whether it's one blow up or whether it's a string of consistent losing for months at a time that eventually dries up an account. We get there one way or the other. So what's the logical next step? We proceed to look to trading education, whether that's courses, whether that's free education. You look at chart patterns, we learn technicals, technical analysis, candlesticks. Maybe we eventually get on to the order flow and we get into level 2, depth of market. And we find someone on YouTube or social media and we hear them say something along the lines of, trading is 90% psychology and 10% technical. So all of our education we just did is unwound, and we're like, did I just do all of that for no reason? We stumble into trading psychology, we go down the Mark Douglas rabbit hole, we watch seminars, we watch YouTube videos, we read books, and we think, wow, this is game changing. I'm never gonna trade the same again, and I'm gonna be profitable. We learn to be objective, we learn how to identify our edge, our setups, define our risk reward, do all the right things that a trader should do. But that's where it stops. They don't talk about what to do when all of the above stops working. Here's an example from my own trading. The month of October, pretty solid. Did I feel like it was the best month? No, but my setups were working and I was able to pull profits from the market over the course of the month. I was just north of a 50% win rate, but I had a 1.65 average risk reward. And so with the 50+% win rate, that's a profitable strategy over the course of the month, and we did great. Then came November. The exact same trades, the exact same setups, the exact same time frames, the exact same vehicles that I was trading wasn't working. I was doing the same things. I was patient for setups, defining my edge, risk reward, keeping everything the same, didn't even scale up, kept the same sizing. But something wasn't working. And that's where I figured out the missing piece. Now, before we get into the missing piece, I do want to thank the sponsor of today's video, Iron Beam.
Welcome to Iron Beam, the future of futures trading. With our cutting-edge chart trading feature and 300+ indicators, you can now trade directly off the chart anytime, anywhere. Delivering seamless trading across all platforms, the Iron Beam journey is supported by 24-hour trader support, low day trade margins, and no account minimums. Iron Beam brings the future into the present. Join now and augment your trading experience.
That missing piece is the subjective side to trading, and you cannot avoid it. If you've been trading long enough, you will resonate with what I just said, because you will have felt this 100%. And if you're not there, I'm sure you'll feel it at some point. Once you start doing all of the above, you have a good edge, you understand psychology, you're dialed in, your trading is boring, it's pretty straightforward, you're not jumping here and jumping there. You do the same thing week in, week out, but some weeks are good and some weeks are not. You go on runs, you go on drawdowns. It's how we manage the drawdowns that ultimately will give us the answer as to are we going to be successful or not in the long run. But the subjective side of trading is bigger than that. Now, what subjective really means, it's our perceptions based on our feelings, opinions, or emotions, which emotions are, again, part of trading. It's how we manage them to ultimately see our successes or failures. But what I just said, think context, okay? Think of the subjective nature of trading as understanding context, because we can look at charts, we can look at technicals, we can do all the right things from mindset, psychology, risk reward, but there's a contextual component that not many talk about, but it is so important in terms of your long-term trading results. And we're not just talking market context. Well, sure, that's a piece. Like, understanding where we are, big picture, what you trade, what impacts your trading vehicles, all that stuff. If you trade gold and silver, knowing where the US dollar is probably not a bad idea, and understanding where that's moving. If you trade, let's say, Tesla, Apple, Amazon, let's say trade large cap stocks, like I do tend to trade a lot of them, I should probably have a feel for where the S&P, the NASDAQ, the Dow, the Russell have been trading and what's relatively strong versus weak, just to get a market pulse and understand the context going in. If we are ripping to new highs and we've been skyrocketing for weeks and we're very overextended, well, that is important because, okay, now I can take that back into what I am seeing on my charts and factor that in accordingly. Beyond that, there's things like CPI, there's data releases, there's Jerome Powell and the FOMC press conferences. I mean, there's a lot of other things that all play in, but they don't have the same impact every single time, which means there is a subjective component. There is not a way to objectively say, oh, it's CPI day, I can't trade because I know this is going to happen. You do not know what's going to happen. You could not say the market's going to react X% up or down. You don't know because sometimes market's not going to react, and sometimes it's going to react in a very big manner to the exact same catalyst. Think deeper in terms of context. What's going on in your trading? Have you been on a really good run the past couple of weeks? And based off of your data, this is your longest run ever. You've never had a run that's been this good for this long. How's the mindset? How are you feeling? Maybe you're not on a good run, or maybe even if you are in a good run, that's completely changing how you view things. You're getting a little cocky, you're feeling really good. Are you thinking the same way that you were 2-3 weeks ago when you were in the middle of this run? What's going on in your life? Do you have a lot of stuff coming up in work, school, family, kids? What's going on? Are you gonna be very, very busy the next couple of weeks? Is it the holiday season? Do you got family in town? Are you traveling? All of these things factor in to the context piece of trading, which then factors in to how you operate and can throw you out of sync like that. The question becomes, how do you avoid or eventually fix these issues? Well, first, you can't avoid them, at least initially. You're not going to avoid them. It's going to happen. This is, again, part of trading. It's part of how this game works. You're going to have to go through this and experience it, because once you do, you're going to know that much more for when it happens again. You can gather that data over time to make corrections. You gather data, make corrections. Gather data, make corrections. You're never going to have all the answers. The context is always going to change, whether in the market or whether in your life. You're going to grow, you're going to adapt. No one's the same exact person they are 3 years from now. No one is going to be the same. Maybe you have a good 2-year run where you're living alone, you've got the same conditions every single day, you're doing your thing, and then you're on a really nice run and you do very well. But then you move in with a significant other, you have a kid, you get married, you graduate, you get a new job. All of these other things are going to impact your decision making subconsciously. But you being 3, 4, 5, 6, 7, 8, 9, 10 years in are going to be seasoned at how to handle that, how to gather the data and make the correct corrections so that you can get right back on track when you do find yourself doing the same things that were working just a little bit ago, not working. And one last thing here. Let's talk technology. Let's talk AI. Let's talk bots. I would be an idiot to not mention this, because that is absolutely going to revolutionize, as it is right now, and change the game and the future of trading going forward. But show me a trading bot with the set of criteria that has been traded in the exact same way for a year plus that is consistently profitable. It doesn't exist. You have to change the inputs. You have to change the inputs to change the output, because the market changes, conditions change, no strategy works forever. You have to adjust and adapt. Now with AI, that's going to change the game. Don't get me wrong. But it still requires some sort of change, and there is a subjective component to when it's time to make that change, what to change, how much to change, and then how long to leave that change and give it to test going forward. So again, even if you go the computer and the bot route, you're still going to come back to those same exact issues, those same exact problems that you're going to have to correct and fix over time. Doesn't mean that that can't be done. It totally will be done, but it's the same exact thing when it comes to the computer that it is to the person like you and me. You could trade like a computer. Maybe it's hard, but eventually we're probably going to all have our own algorithm and trade automatically based off a set of criteria, but we're going to have control over that criteria and when that criteria needs to change. Now, if you want to go deeper into trading psychology, we put together a video that covers a lot more than just the subjective nature of trading. I'll link it below here, but it's also up on the trading psychology playlist here on the channel. Thanks so much for watching. Any links and resources are below, and I'll see you guys in the next one. Peace.